It is my pleasure to introduce our first presenter for today. That is Raj Grover, CEO and founder of HiTide. HiTide shares are traded under the ticker symbol HITI on the TSX Venture, and most recently, just of last week, also on the Nasdaq exchange. HiTide is a leading North American retailer, distributor, and e-commerce provider of adult use cannabis products, hemp-derived CBD products, and related accessories. Raj has led the business through an exceptional period of growth, where HiTide has outperformed operational and financial objectives. The last 6 months in particular have been transformational for the company, as HiTide secured the capital needed to rapidly expand its business. The bolstered balance sheet has helped to uncover an emerging US M&A strategy, where we believe there's long-term potential to consolidate complementary businesses in the US at very attractive valuations and benefit from robust organic growth ahead. With that, I'd like to turn the call over to Raj to discuss the business of HiTide and the tailwinds we could expect to see as the economy continues to reopen. With that, over to you, Raj.
Thank you for that introduction, Andrew. Appreciate it. Hello, everyone. My name is Raj Grover. I'm the founder, president, and CEO of HiTide Inc. I started the company in 2009 with a total investment of $48,000 with 2 employees. And today we're one of the most unique and diversified cannabis ecosystem in North America. We are a retail-focused company. And with that, I'll move on with the presentation. This section here is for the lawyers in the group. So here's a company snapshot. Like Andrew mentioned, we trade on the TSXV and on the Nasdaq now under the ticker symbol HITI, and in Frankfurt under the ticker symbol 2L/A. We became the first publicly traded cannabis retailer anywhere to be approved for trading on Nasdaq. We started trading on Nasdaq on June 2nd. Our shares outstanding today are 49.5 million. Market capitalization is sitting at approximately 491 million. And today we've grown from, in 2009, from 2 employees to 825 employees as of last week. I'm going to be going a little faster than usual in this presentation because of the time we have. We only have 30 minutes, including Q&A, so it'll be generally a bit faster than I usually like to go. So our business is divided into 2 main segments. One is retail and one is wholesale. In retail, it's divided into bricks and mortar and online. So in bricks and mortar, we do our business in Canada. We have 87 retail cannabis stores in Canada, in Alberta, BC, Ontario, and in Alberta, Manitoba, Ontario, and Saskatchewan, hopefully soon to be BC. Majority of the stores are under the Cana Cabana brand, which I will explain more in the slides that are coming up. Remaining brands are New Leaf, Kush Bar, and Meta Cannabis Supply Co., which are all being consolidated in Cana Cabana as we speak. And then moving on to the online side of things, we acquired a business called grasscity.com in December of 2018, which is one of the oldest online smoke shop of smoking accessories in the world. It carries about 6,000 to 7,000 SKUs on its platform. It was a vertical integration play for us, as we are also the manufacturer and distributor of many of these smoking accessories. To be precise, we manufacture about 75% of all of our product catalog in-house. We followed that up with the organic launch of CBD City in May of 2020, from which we gained many valuable insights. And then we ended up acquiring fabcbd.com in May of 2021, which I'll also talk in the next few slides. And then moving on to our wholesale business, we're also a global designer, manufacturer, and distributor of proprietary and licensed smoking accessories. We also have relationships with celebrities such as Snoop Dogg, Trailer Park Boys, studio brands such as Paramount Pictures and Sony Pictures, and also artists like Guns N' Roses, which I'll also explain on future slides. Valiant Distribution not only takes care of our in-house product strategy for our own chain, but we also sell wholesale to other smoke shops and other retail channels, upwards of 3,000 stores worldwide now. So our company has been totally transformed over the last 6 months. As you can see, 6 months ago, we're sitting at around 66 stores. We're now at 87 stores as of June 7th. Our revenue has increased from 70 million 6 months ago to now a run rate of 175 million. Our trailing EBITDA was sitting at negative 2 million. That's gone up to positive 13 million over the last 4 quarters. We became the first cannabis company in Canada, retailer in Canada to declare positive adjusted EBITDA, which was Q2 of 2020. And we followed it up with 4 consecutive quarters of positive EBITDA. Our US run rate has increased from 22 million to 40 million with our most recent acquisition of Fab CBD. We've also tremendously strengthened our balance sheet. Our cash balance has increased from 21 million to approximately $33 million today. And our debt has been cut off from 72 million to approximately 32 million. We just announced it yesterday that we've eliminated all of our senior secured debt, bringing our debt down to only $32 million now. And there's only $3.8 million of immediate debt that's due within the next 12 months. So we're very comfortable in terms of our balance sheet. Our capital markets profile has also been turned upside down. You know, we were trading on CSE just a few months ago, or about 6-7 months ago. We transitioned to Toronto Stock Exchange Venture, and then from OTC more recently to Nasdaq, opening up to more reach to institutional and retail investors. We also trade a lot more than what we used to. We were trading around $300,000 a day about 6 months ago, and now we trade around $8.1 million a day. Our market cap has increased from 79 million to 491 million over the last 6 months. You can see some of our recent financial highlights here. Our revenue in Q1 of 2020 was only 13.7 million. You can see the trajectory there. In Q1 of 2021, we put out 38.3 million. So a really nice increase there. Same thing with adjusted EBITDA. Q1 of 2020, we were looking at negative 821,000, and we've had 4 consecutive quarters of rising adjusted EBITDA from 1.7 million in Q2 of 2020 to 4.6 million in Q1 of 2021, which is the highest amongst our peer group here in Canada. HighTide also, as I mentioned earlier, HighTide became the first Canadian public cannabis retailer to report positive adjusted EBITDA. Total assets of the company are sitting at $166 million. You know, I thought this was important to showcase this slide in our presentation. You know, unfortunately, the retailers have been grouped in the same bucket as LPs, which are facing many issues as, you know, excess supply issues, shuttered facilities, negative EBITDA. Well, it's totally different metrics when it comes to retailers. You know, we have positive EBITDA, we have positive revenue growth, and we deal with minimal CapEx requirements. To put up a 12 to 1,500 square feet store, we spend anywhere from $250,000 to $300,000 inclusive of inventory to open up a store, and our ramp-up periods are only from 3 to 9 months in any of these locations. So it's a very different ecosystem than LPs. But unfortunately, you know, to date, LPs have had all the limelight, and we're sort of grouped in that bucket together. When they are collapsing on their downfall, unfortunately, we're still bearing the brunt of it, but we think this will change in the near future. Our financial performance or financial profile is much better than our peers, and that's simply because of our experience in the cannabis industry and doing business in the cannabis industry over the last 10 years. We have structural advantages due to our ecosystem as we touch hemp-derived CBD products, we touch smoking accessories, and we're also a large retailer with 87 stores in Canada and growing every day. This is our leading cannabis retail brand in Canada. It's called Cana Cabana. I'm very proud to say that 50% of our daily transactions that happen in our retail stores happen through our loyal Cabana Club members. I don't think any of our peers can say this. This is simply because we have a very unique strategy and unique offerings that we present in the store. I'll show you guys that on the next slide. You know, we're also able to monetize our data from these stores. The licensed producers need to guide their growing capabilities and where they're going quarter after quarter. You know, the consumer preferences in cannabis are changing a lot. They're changing very fast, so they need this data. Other industry stakeholders like investment banks also need this data. So we're able to monetize that data from 87 retail stores and counting. This is a very high margin business. Cabanalytics commands around 95% gross margin. So our best margin business in the portfolio. Typically, a Cana Cabana location is around 1,200 to 1,500 square feet. and it costs us around $250,000 to $300,000 all in, including $50,000 of inventory to launch these stores. And these numbers have come down. When we first started, it was around 350 to 400. Now we have more economies of scales. We have more relationships with GCs and builders, and we brought that price down, which is one of the most competitive in the industry. One very big thing I'd like to mention about our brand, which is very proprietary to our brand, is we consider ourselves the one-stop shop of cannabis. So because accessories was in our DNA since 2009, you know, when you go to our stores, you don't see 3,000 square feet stores with 3 big TV screens, you know, and 3 bud tenders. It's very different. We are wall to wall surrounded by accessories. A typical dispensary, if you go to Canada or the US, you'll find like 60 to 70 SKUs of accessories. While in Cana Cabana stores, you get up to 700 SKUs of accessories. And this is what makes it that one-stop shop of cannabis, providing an extreme amount of variety to the customer and utilizing that retail space, extracting the best amount of dollars per square foot we can get in our stores. And we keep them tight in Canada. The competition is very severe in Canada. So, you know, we're not building large stores. We're keeping them to 12 to 1,500 square feet. At the bottom of the slide here, you can see in Alberta, we have 58 stores. In Ontario, we currently have 18 stores. We have approximately 10 stores under construction in Ontario. And, you know, unfortunately, over the last month and a half, construction has been on a complete standstill. So that is getting better. And we should be launching another 10 stores or so in just about next 2 months in Ontario alone. Manitoba, we have 8 stores. We're building more stores in Manitoba. Saskatchewan, we have 3 stores. There's more stores coming up in that province as well. Now, this is talking about our e-commerce business. We started with grasscity.com. It used to be our customer, and they only had about, in 2016, they used to buy Valiant distribution products and sell on their platform. So we had that relationship with Grass City, and this is something to be noted across many of the acquisitions we are doing. We have very deep relationships, you know, Rolodex in the industry since 2009, because we've been a part of the industry. So Grass City is a very unique business. It was founded in 2000. It's the oldest online smoke shop in the world. And HighTide acquired 100% of it in 2018. In 2020 alone, we saw 26 million site visits from cannabis consumers that indulge in accessories. We shipped over 100,000 orders in 2020 alone, and we hold over 560,000 customers in our database. We also have one of the biggest online forums in the cannabis industry worldwide, anywhere, only second after Reddit/Trees. In the lifetime of these cannabis forums, where people come and communicate about growing cannabis, about their different interest in cannabis, about their different strains that they like, you know, in the lifetime of that, we've seen upwards of 34 million people, and currently we have 6.8 million current forum members on grasscity.com. And we also have a very high social media following with 290,000 followers on our social media pages for Grass City. Because of the success of Grass City, we acquired a second company called Smoke Cartel, and we closed this acquisition in March of 2020. And this is one of the most interesting acquisitions we've made. You know, very similar to Grass City, it sells consumption accessories on its platforms, but it uses its proprietary drop shipping technology to do so and carries almost zero inventory. So Grass City offers 6,000 SKUs, 60 to 70% of those SKUs come from HighTide manufactured products. Smoke Cartel offers 15,000 SKUs and carries almost zero inventory and uses its proprietary drop shipping technology to do so, and is very profitable. It's quickly rising, and we're now using this drop shipping technology on Grass City and also CBD City, which I will talk to you guys next. But you know, this is a very unique business where it's asset light, or almost no assets except for the platform itself, and we're able to generate some very meaningful results from this platform. This is the next business that I'm very excited about that we acquired in May of 2021. You know, we launched CBDcity.com, which I'll speak on the next slide, which was an organic business that we launched because we already had these very established online capabilities. Because of Grass City, we decided to test the waters in the CBD industry, because that is, you know, CBD industry is projected to be a $23.5 billion business globally. So, and, you know, we had some very successful outcomes from CBD City. Based on that success, we acquired Fab CBD, which is one of the most loved and reviewed CBD brands in the United States. Fab CBD was founded in 2017, and HighTide acquired 80% of that in May of 2021. And we have the option to acquire the remaining 20% at any given time. The founder for the next 3 years, the founder of Fab CBD, Josh Delaney, has joined HighTide, and he's managing not only Fab CBD for us, but because of his relationships in the CBD industry, he's also promoting our CBD business globally and looking at other CBD businesses, which we now are looking to bring into our ecosystem and bring Fab not only to not only keep on bringing it and establishing the brand in the United States, but also bringing Fab to the Canadian market and sell Fab products in our 87 stores and counting in Canada, and also sell Fab products in EU by bringing the Fab brand through distribution channels in EU that are already established and we are already a part of. And the Fab's acquisition came along being from CBDcity.com, which we launched in May of 2020 as an organic CBD brand. CBD City carries brands from many different CBD manufacturers and established it sort of like the big CBD mall online. And once we saw the success and the high margins of CBD on this platform, that's what led us to then acquire Fab CBD. And we're very excited to continue to launch even more CBD initiatives and continue to build the Fab CBD brand worldwide. Now, this is talking about our wholesale business here, Valiant Distribution. Our Valiant Distribution is consolidated. Our wholesale business is consolidated under Valiant now, formerly RGR Canada and Famous Brands. So our distribution division extends to Calgary, Las Vegas, and Amsterdam. We have warehouses in all 3 cities. We are contractually tied up with factories in China, the United States, and European Union. I've made over 50 to 60 trips in China over the last 12 years. So we have some very established relationships over there with over 200 factories in China. This is 10 years of experience in designing and branding of consumption accessories. We currently have 5,000 SKUs in our portfolio, out of which we roughly manufacture 75% of them. So we design them, we do the packaging around them, and we import them wholesale and retail through our channels. We also have relationships. We were the first company in 2016 to approach Snoop Dogg to partner up with Snoop on consumption accessories. So we make glass for Snoop. We make vaporizers and other products for Cheech and Chong, Guns N' Roses, Trailer Park Boys. And these are just a few brands that you're looking at. We roughly have about 9 consumption accessory licenses and counting. These licenses are very valuable and they command shelf space in almost any retail settings, not just a cannabis dispensary, but smoke shops, head shops, convenience stores, gas stations. They're sold in many stores worldwide. And we continue to acquire even more licenses as it fits really well in our ecosystem, and given our manufacturing capabilities in China, we feel that we can do more and more of licensed product lines. I know, Andrew, you're on the screen and we want to get into the Q&A, but I think we're almost there. These are just some of the products that you can see that we manufacture. And our future growth drivers, we are known to be the consolidators in the space. The most important elements for us when looking at any companies is looking at the companies that are complementary to our ecosystem and that are immediately accretive to earnings. So having said that, I think we're pretty much at the end of the presentation here. Andrew, I think we're good to proceed with the Q&A.
Raj, wonderful presentation as always. We enjoy having you. To our audience members, just a reminder that you can submit Q&A through the Q&A function on the Zoom webinar. Alternatively, you can also email me directly. Happy to take emails, questions through my email. Raj, I'm going to kick us off with a first question here. The last couple of slides, you're discussing your e-commerce strategy, the wholesale business. These are all very, very strong businesses in the US, where you've built those businesses to over a $40 million annualized run rate. And also M&A has been a very important part of that strategy. Could you talk to how you continue to build an M&A pipeline in the US, maybe some examples of the valuations you are seeing out there, and whether you're focused on companies that are complementary and have the same products or services that you already have, or would you look to add new products and new services with your M&A strategy?
Sure. So Andrew, as you know, we have a very robust M&A pipeline presently, and the deal flow continues to get bigger and better. Now that we're on the Nasdaq, even more interested groups are reaching out to us but we're being very thoughtful and methodical about evaluating these potential targets, looking at them and adding additional e-commerce platforms to further vertically integrate our retail focused strategy and add even more accessories and hemp-derived CBD segments related business to our ecosystem. EBITDA arbitrage is a very important part of our value creation strategy. So we continue to do that. A lot of these private companies, small companies trade at 6, 7 times, 8 times EBITDA. We trade at completely different multiples as public companies. So we're very focused on doing that. And we have a very robust pipeline. So in the very near future, we will be announcing more acquisitions as we've declared over the last 4 or 5 months that, we're very active in this space, consolidating. We have the Rolodex, we have the relationship. So you should be able to hear more in this regard. But we are definitely working on that EBITDA arbitrage strategy because we have a lot of companies that have approached us, and now the onus is on us to select the best possible candidates to join the HighTide family.
That's great color. Thank you, Raj. Another question here, and this one is on the conference theme. Returning to ways that COVID may have impacted your business, including your brick and mortar stores, which I believe you mentioned in your presentation. I think in our earlier discussions, there's also some supply chain issues. What is the upside to HighTide's business as we continue to move past these COVID hurdles that we've experienced in the last 12 months? And how do you expect to benefit and grow as the economy reopens?
Yeah, so we've definitely felt the impact, Andrew, because of COVID over the last month and a half, 2 months. Ontario is on again, off again. So over the last month and a half, we've definitely seen a dip in sales in Ontario, but we saw this exact same pattern over the 2 previous lockdowns. Construction has also been on complete standstill in Ontario, but I'm very hopeful. I'm hearing, Friday we're opening up. So I think we'll see a very good bump in sales back up, exactly how we see in the previous 2 lockdowns. We're also working on more growth coming up in Ontario. Like I mentioned, we have about 10 locations under construction currently in Ontario. So within the next 2 to 3 months, all these stores will come online. Hopefully, we don't have another lockdown type of situation. It doesn't look like that's going to be the case. And you're right, supply chain, logistics, and production in China has also taken a hit. An empty container used to cost us $2,000. Now that's $10,000. But I also think that is short-lived, and production will pick up. Supply chain will get better by the end of the year, I think. So things are looking good. There is light at the end of the tunnel. So I think by the end of the year, supply chain will pick up. Our wholesale will pick up. Our wholesale has already picked up. As soon as we get any product in the country, we're able to move it. Because our products remain to be in very high demand. So I see these hurdles as temporary hurdles, temporary blips, but they're definitely getting better.
That's great. I do have an email question here, and it is on your Nasdaq recent uplisting. Could you spend some time highlighting how the the recent uplisting to the Nasdaq exchange, what those benefits are, and also how this uplisting could potentially help with your US M&A strategy?
Yeah, absolutely. Look, so I'm very excited about the fact that we became the first publicly traded retailer or a retailer anywhere in the world, cannabis retailer, to start trading on the Nasdaq. And the Nasdaq listing is in line with our keeping our long-term goals for our shareholders by creating increased liquidity and highlighting our company to much larger M&A targets than what we're looking at today. And also opening up to a much broader range of international and institutional investors. As you know, just yesterday, we announced that we were added to another ETF, which is the Advisor Shares ETFs. Prior to that, we were added on to TSXV, which is another NYSE listed ETF. And prior to that, we were added to HMUS. So that's 3 ETFs that have added us now. We were trading around $300,000 a day 6 months ago. Now we trade around $8 million a day. I think this is going to continue to get better. So we'll have even more liquidity in our stock. We are known to be the consolidators in the space. That is our personality. EBITDA arbitrage is huge to us. So I think with being trading on NASDAQ now, and with all of these groups that are reaching out, and with our Rolodex in the industry, I think there are exciting times ahead in terms of when it comes to consolidating even more in the United States and making some more moves in the US.
That's great. It's just sticking on that theme and, potentially being a consolidator, and also on the theme on recent events. Certainly in recent months, you raised equity capital a couple of times now. You also had a press release out yesterday, potentially noting that you're potentially in the late stages for a bank credit facility. Where do you see your priorities in deploying capital today, and where should we expect HighTide to be active in the months ahead?
So Andrew, building stores, it's not as expensive as what the LPs have to do, put hundreds of millions of dollars in their facilities, but they still cost money. And we put up stores very, very rapidly. Like I said, 10 stores are coming up in Ontario within the next 2 months. There's more stores opening up in Manitoba, in Saskatchewan, in Alberta, and soon to British Columbia. So we do need capital for store growth. So a lot of the funds are earmarked for store growth. And then, we are so active in the M&A space and doing M&A that we want to be ready when the right opportunity presents itself. So obviously, we're using our cash very wisely, and we try to use our paper that's very valuable, as efficiently as we can. But in some cases, like the Fab CBD, it was hotly contested, and there were 6 other parties on the table, and the requirement was around $13 million of US cash. And we came up with it. So, the cash is being earmarked for some really accretive M&A that is accretive to our company right away. And also store growth, which we are very rapidly growing. Our goal is to get to approximately 115 stores by the end of the year. Now, construction has slowed us down a little bit. And we may be, 5-10 stores off from that number, or we may still hit it. So, but we definitely need to have some stores. So that's sort of where the use of proceeds will go.
That's great. And maybe if we can sneak in one last question here. HighTide operates as the leading pure play accessory e-commerce platform in the world, Grass City and Smoke Cartel, and you continue to build on that. Could you speak to where the business is today relative to the total addressable market opportunity, to give us that final blue sky upside scenario as to how big this opportunity could be down the road?
Yeah, absolutely. So as per Q1 of 2021, I think our approximate spread of cannabis versus accessories was 70-30. So we're talking about roughly about $50-60 million. So this is rough math on accessories. The accessory industry in US right now is sitting at around $1 billion. So we're just at 5% of that total space. Even CBD, right now we're doing between $13 to $15 million on hemp-derived CBD products. But that is projected to grow to $23.5 billion in the next 5 years. So there's a lot of opportunity in the accessory space and the hemp-derived CBD space. And we are just in our infancy of growth when it comes to both accessories and hemp-derived CBD. So there's a massive opportunity that awaits us. So this is sort of the closing thoughts that I'd like to leave everybody with, is not only are we a leader in bricks and mortar retail in Canada, and we're very well rehearsed for what's coming up in the US, we also are sitting at a massive opportunity for accessories and CBD, and this has already been part of our DNA and personality since 2009. So, we're in a perfect position to capitalize on both accessories and CBD business.
Raj, on behalf of all of us here, I'd like to extend a big thank you for an amazing and engaging presentation. We thank you for joining us. We look forward to watching and participating in your future success. As a reminder to our audience, HighTide trades on the TSX Venture Exchange and the Nasdaq Exchange under the ticker symbol HITI, and we rate the share speculative buy with a $20 per share Canadian price target.
Good afternoon. Thank you everyone for attending today. I'm Simon, the head of institutional sales and trading here at Echelon Capital Markets, with some closing remarks. It's been a unique 18 months, no matter where you live or in which sector of the economy you're operating. Companies have clearly had to adapt or face potential loss of revenue or even closures. But those companies that have adapted were nimble enough to pivot their workforces, product or services. The results have been outstanding to date. But it's not been without its challenges or unexpected disruptions. You just need to look at the global semiconductor shortage for 2021 to see some major risk factors still prevalent. Yet we wanted to focus on the positive momentum building for companies post-COVID and what that would look like. How would innovative companies such as those presenting today handle potential disruption while still outperforming in a strong growth market? And hopefully today's conference gave you some insight into the different sectors and how these companies are tackling these opportunities and challenges. Thank you to all the presenters. We're big fans of all these stories today. Lastly, thanks to our award-winning head of research, Rob Goff, and head of Quebec sales, Pierre-Yves Therese, for putting on a conference that highlights great potential for investors in the months to come. In 2020 and 2021, Echelon Capital Markets has itself innovated and grown, becoming second in the capital markets non-bank league tables in Canada for independent brokers in 2021, number one for wealth AUM growth in Canada, and for achieving 2 top 5 rated Canadian analysts as ranked by TipRanks. Thank you for attending. We'll be providing videos of the conference on YouTube in the coming days. So if you missed something, please feel free to check our channel. We have research on the majority of presenting companies here today, so please reach out if you want to talk to our analysts or access our research. So thank you for attending and have a great afternoon. Over and out.
Thank you, Simon.
Thanks, Simon.
Thanks,
Thanks,
everyone.
July. Thanks, everyone.